Okay, guys, let's start. This is webinar training session of lecture 1, 2, and 3. I'm going to show you the implementation of the concepts and topics that we have covered in lecture 1, which was support and resistance, lecture 2, which was using candlesticks analysis and chart patterns, and lecture 3, which was divergence and supply and demand. So I'm going to show you revise all of that, and then I'll show you how to utilize all of those, all knowledge from all those three lectures together to trade successfully, to spot entries, to where to exit the market, how long to hold the trade, and so on and so forth. And that is what the plan is. This exercise will give you, I'm sure, a lot of confidence. And obviously, you guys can ask me questions at the end of the session. This is the exercise, exactly the same exercise that I'm suggesting you guys to do on your computers every day, 4 to 5 hours. Forget live trading. If you can do this exercise successfully every day, 4 to 5 hours for the period of 2 to 3 weeks, 4 weeks, 5 weeks, and trust me, it will significantly improve your trading skills. Why it will improve your trading skills is this: because I analyze the market on the basis of each candlestick, and exactly that is how you trade in the live market. So it does not matter if you're looking on the previous charts, old charts, because it's exactly the way you're trading the live market, based your judgment, your reasoning, you either to stay, exit, hold the trade on the close of each candlesticks. Make sense, guys? Understand? Do you understand? And does it make sense? Okay. First of all, I'm going to revise each lecture quickly, each lecture. So I'm going to show you the markups of each lecture, and you guys need to confirm if you has understood those concepts first, and then after revising each lecture's topics, I'm going to combine them together and discuss entries and exits and hold trades and trading examples. Are we clear on this, guys? Say yes. Great. So lecture 1 was support and resistance, how to mark support and resistance, guys. Horizontal support and resistance. Gerard, that's fine. That's fine. I will be revising this tomorrow, so no need to stay. Absolutely, there's no need to stay. You're not missing this, what I'm teaching today, because I'm repeating this twice within this week again. So you will have better opportunities. Understood? All you guys need to do is to see one of the lectures that I'm giving and focus on it, and then do the practice. So, guys, first lecture was support and resistance, how to mark support and resistance. The principal point you need to take out of is price moves within support and resistance, guys. Again, I say price, like a fish which can't live without water. Price cannot live without support and resistance. Pretty simple. It moves from support to resistance, resistance back to support. It breaks one of the other and reestablish them again. I'm going to show you the examples of horizontal support and resistance, guys, which is point of reactions and point of failures. Where are the point of reactions? We mark them on a daily time frame. The reason why we mark on the daily time frame, you guys already know, so I'm not going to repeat that here. I'm showing you the significant levels of reaction which are only possible by the institutions entering into the markets. Understood, guys, so far? I'm going to do this very quickly, guys, because all of you already knew, and the aim and objective is to let's discuss the entries and exits. So once you found these areas, just mark your support and resistance there. Markups are really important. If your markups are not right, then it means you're not looking on the institutional levels correctly, and that is where the problem is. Understand, guys, the importance of markups, correct markups. Then point of failures are the wicks. Let's mark your main wicks, guys. Point of failures are the wicks in the market. That's what you need to mark. You need to practice and exercise this so that you have an eye for these levels, guys. It is very important. Understand so far? I've already marked horizontal support and resistance, point of reactions, point of failures. Understand? Say yes, please, so I can move forward. Now, the support and resistance in the rising and a falling market, which is vertical. Guys, remember, how we approach this is this. Our objective is to trap the price within support and resistance. Why do we trap the price within support and resistance? So we can follow the price, because we know the price follows from one support level to another resistance, and another resistance to the support levels, guys. Understood? So let's capture the price. We begin with the ceiling first. I saw the markups of all of you. They were absolutely perfect, so no issues on this. I've trapped the price between this resistance and support, guys. This is what the price is doing from this support, rising back to resistance. Second possibility, resistance back to support, guys. Or the third possibility is the price will break either of them and establish a new support or resistance. Understood, guys? Go into 4 hours, further trap the price. For the price to make journey to the downside, price has to break this support level. It's very simple. Then this is the journey the price will take. If the price has to go to the upside, guys, pretty simple. The price has to break this resistance level. So we have trapped the price, and in this way we can predict the market, anticipate the price market based on the price movement. Understand? Any questions? Any questions so far, guys? Okay, so that is the lecture 1, support and resistance markups, horizontal and vertical, guys. Now I'm going to show you the rules of breakout. Support and resistance. Price moves support to resistance, resistance to support, then from support to resistance, resistance to support. It breaks, we do not enter. It breaks, it retests, goes back and fails to enter. When it fails to enter, that is where we take a trade. Understood, guys? That is where we take a trade. And then continuation to the downside. So this is the rule that you need to follow. Whenever there is a breakout, all you need is to wait for the price to break, come back, confirm she has failed to enter, but that is where you enter. Understood, guys? Very important. So if your entry is not based on this rule, you will have losses. You will have losses, and that is wrong. That is not good. And if your entries are based on these rules, trust me, 80% you will be right. Understood, guys? Yes? Great. So lecture 1 is completed. Done. Revision of lecture 1, support and resistance, horizontal, vertical, how to mark them, and the rules of the price to do the breakout, and how do we enter. So that's what I've discussed. Lecture 2 was candlesticks analysis. Pretty simple, guys. The candle with the strong body represents the strength. The body represents the strength. Remember, every candle represents a fight between. This is what you need to take out of the lecture 2, the most important part of it. Every candle represents a fight between buyers and sellers, and there will be 3 scenarios. Buyers win, sellers win, and nobody wins. And buyers win, we say bullish candlesticks. Sellers win, we say bearish candlesticks, and nobody wins, we say dojis, neutral candlesticks. Understood, guys? This is the fight. Candle 1, buyers push the market up, sellers push the market down. Buyers push the market up, sellers push the market down. Eventually, one or the other wins. The body represents the strength. Second point, wick. If there is a wick, it represents a failure of one of the participant and strength of another. So wicks are important. We call them pin bars. If you found them on support and resistance levels, they are showing strength of one of the participants. So these are significant. How does the wick establishes? The buyers push the market up, sellers push the market down at one stage. The sellers has pushed the market to these levels, and then what happened before the market closes? This candle closes. Buyers came in, pushed the market up, right? And that is why the failure of the the failure of one of the participant represents the wick. It represents the failure of who? Sellers. Understand, guys? Clearly understand. Body represents the strength. Wick represents the failure of one of the participants. Understood completely? I'm moving forward. Now remember, apart from my candlesticks analysis, guys, what is important, you also need to learn all candlesticks patterns, guys. Remember, give enough time, learn all candlesticks patterns, print them off, keep them with you at all times, and follow them. and follow them, right? 3 patterns every day and try to mark them on your chart and see if you can identify them on your chart. You need to do this practice day inside out every day. Single chart patterns, double chart patterns, candlesticks patterns, and triple candlesticks patterns. Understood, guys, what I said? Great. Moving forward. 2 chart patterns that I have discussed, double tops and double bottoms, right, guys? These are reversal patterns. If this is a resistance, price came up, established one top, came down, guys, and if she goes back, fails either on the same level or below, it establish a double top, guys. This is first top, right? That is a second top. If you have seen this, normally this is a reversal pattern and price will go to the downside. And remember, when price testing establishing double tops at resistance, it will make a shape of an M. Can you see this? Understand, guys? Can you see this? It will establish a shape of an M. And similarly, when the price is on support, guys, double first bottom, the price will rise and test again. It will establish a shape of a W, guys, and then continuation to the upside. So these are reversal chart patterns, which if you see them on support and resistance, there is high probability that the price will make a reverse, price will reverse from those levels, guys. So understand, you can use them while in your trading using candlesticks analysis. Understand, guys, 100%. Now, I've asked you a question. Why does we call the double bottoms and double tops reversal patterns, and why do we say when the price establish a double bottom or triple bottom, there is a possibility the price will reverse? Can anybody tell me the reason? It is not just a philosophy of double tops and double bottoms which is doing the reverse, which is just changing the price direction. There is a reason, the institutional reason behind it. Tell me the reason. No, that is wrong. No trap orders. Another person. Anyone. So you guys know double tops, double bottoms, the price reverse from there. But why? The question is it a magic or what? No, 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 that's wrong again. No, Michael. Now, I'm going to show you guys and explain you. I forgot to explain this in my lectures. I did explain to one of the students in this, who is with you at the moment, and that's where I realized I need to explain this to you guys. Very important, guys. All of you, listen to me very carefully. Very carefully, listen to me. Every chart pattern, there is a reason. I'm going to discuss as we keep on learning those chart patterns. But the ones we have learned, I'm explaining you on those ones. Now, remember, this is a support, right, guys? The price came down and you have a first bullish candle. The bulls came in, institutional bulls came in, right? And vice versa, that's right. Now institutional bulls came in and they have started rising the market, right, guys? So institutional bulls came in, buyers came in, and they have started pushing the market to the upside. But the problem is they might not have enough strength. There is not enough investment by the buyers to take the price to the upside straight. Understand, guys? They don't have enough strength. They don't have enough investment here to take the price to the upside. You understand what I'm saying? There's not enough money here for the price, for the buying money here to compete with the sellers, So these buyers who came in, institutions, doesn't have enough investment to move the price from this level to the upside. What they need more investment, right? So they came in around these levels and the price has risen. Now what the problem is, they are asking more investment buyers to join them in this venture to the upside and saying to them, invest on this amount here and let's take the profit on these levels. Make sense, guys? But the problem is the other institutional buyers are not interested to enter on the price around these levels because they believe, and they are saying this, look, you guys enter around these areas, which was a better price than us, level than us. You wanted us to enter, invest our funds around these areas. Absolutely not. We want to enter again. If you move the price back to the downside and then yes, we want to enter. We will make an investment. Yes. And this is what the new buyers are saying. But the problem is the initial buyers who already had entered does not have enough investment and strength to make this move to the upside by themselves. Make sense, guys, what I'm saying so far? Say yes. Say they don't have enough investment, enough strength, buying power to move the market. They need help for the other buyers to come in, right? What they need, they wanted these buyers. They're saying to them, look, we're not going to enter on these levels. Bring the price back to these good levels of support, and then we'll make an investment. Obviously, then what happens? The buyers push the market down, right? Take the price close to the support levels, and then you'll always see more institutional buyers comes in, right? And then they move the market to the upside. And what happened in returns? You will see a double bottom. Understand? A double bottom formation. Does it make sense why the price goes back and make a double second bottom? Makes sense. Second bottom means investment by more buyers. Now there is enough strength in the buyers that they can move the market to the upside. Make sense, guys? If you guys understand, say yes to me. It is very important you understand this, guys. 100%. It is not just a chart pattern that you'll see and say, okay, double bottoms, let's buy from there, double tops, let's buy, sell it from there. That bollocks. There is a reason behind it. Understand, guys. And now listen. Let's say if they bring the price down in anticipation that more institutions will invest. But at times, what happens, like it happens in our real life, guys, they bring the price down, and the other institutions say, nah, we're not going to join you guys. We have changed our mind. We don't find the price attractive. We don't like the level. And what happens? The price breaches and continue to the downside. And that is the called continuation. Make sense, guys? Make sense? So the buyers who came in slightly has failed to overtake the institutional sellers who were controlling the market because they had failed to seek more investment from the more buyers, more investment to, to to beat these institutional sellers here and continue and move the price to the upside. Make sense, guys, what I said? Say yes. If you guys completely understand the reasoning behind double bottoms and double tops, say yes, guys. It is really important. You need to know exactly why the price moves to the upside, why the price moves to the downside. Okay, great. So in the second lecture, I've show you guys how to use candlesticks analysis by using chart patterns, double tops and double bottoms to enter, exit, and hold the trade, which I will be showing the exercise very shortly. Now coming to the lecture 3, supply and demand, guys. The first thing, supply and demands are the kill zones where the stop hunt takes place. I'm very briefly going to show you how do you mark them. 4 hours time frame is the best one, and you mark them on the levels of reaction. So this is a kill zone, guys. I'm just showing you. I use it. I saw them on the chart, but I don't mark them. And then see, this is a kill zone, guys. These wicks represents killing. What does it represent? A lot of buyers came in around these levels and suddenly market pushed the price down. These wicks take out the stop hunts, stop losses, and then continue moving to the upside, guys. Understand? So this is called the death zone, the kill zone. You need to see my lecture 3. I'm going very briefly on this. 4 hours is the best one because then you will have decent space between each supply and demand zone to trade with. Make sense, guys? You can do on 1 hour, but then the problem is they will be close to each other that your chart will be so crowded that you wouldn't understand which one to utilize and use. Make sense, guys? And remember, they are like point of reactions, guys, but they are not support and resistance levels. These wicks represent where the killing took place. So that if I'm trading, that is enough for me. I need to have enough space in between so I can trade with. Make sense? Understand, guys? You see, this is also, so if I give you the indicator and you'll mark your indicator on the charts, it'll show you all those areas shaded automatically. There is an indicator of supply and demand which is very, very accurate indicator, guys. If you want to use them, I've already given, I'll give it to you guys again. Understood, guys? Say yes if you understand. Now divergence show the volume in the market. Divergence show the volume in the market. Price is rising, but if the indicator relative strength index showing divergence, guys, it might show a different story. Positive divergence is one. Negative divergence first. Price is rising, guys, but what's happened on the indicator? It is making lower highs. Lower highs, guys. This shows that this leg is losing its strength, and there is a possibility the price will fall, and exactly that what happened. So I've in a detail have discussed divergence, how to mark divergence. This is a secondary analysis, not a primary analysis, guys. Do not just trade with divergence, because divergence might take a couple of hundred pips. Add on, absolutely right, Anand. Add on, it might take a long time before it activates the trade, and you cannot just trade with the divergence, but you can see divergence at a certain support and resistance level. Then yes, keep in mind possibility is that there might be a reversal, and if so, focus on the price action. I'm going to show you the examples of divergence quickly, guys. Just see this. So when the price makes higher highs and lower highs on your RSI, guys, and that's all you need to know. Understood, guys? Completely say yes if you understand. We use RSI to see the strength of the currency, guys. If the price is around these areas, I would not like to sell. I want the price to fall back under 70 to show that it has lost its strength or begin to lose its strength, and then only I want to short. So never sell when the price enter the 70 zone, because this is extreme strength, extreme power, guys. You are fool if you're selling on this. So if you want to sell, let the price fall back under 70 to show the sign of losing its strength. This is a relative strength index, not showing you some oversold and overbought areas. Understand, guys, what I'm saying? Price on the indicator above 70 and 30 showing extreme strength and extreme weaknesses. You don't sell in extreme strength, and you don't buy in extreme weaknesses. Understand? You need to read this carefully, guys. Understand? Any questions so far, guys? I've revised the first three lectures. Hope you have no question, but if so, you can ask me. Any questions by anyone? Say yes or no, please. Thanks, Anand. Great. Okay, let's try to find the trades now. Let's try to find the trades. Yes, this is the exercise I'm going to do with you guys. Okay, when I say ST, it stands for this, guys. Understand, guys? So whenever I refer to ST, it stands this. Understand, guys? I'll make it easier, because one of the students, our great student, one of our best students, have said that I haven't discussed this. I did discuss this in the first lecture. It is just I've not used the terminology which you are used to, and that is the reason. Okay, guys, let's go. I'm starting with Australian dollar. Let's go and analyze the Australian dollar based on price action and see if we can find entries and exits and trades. Okay, guys, begin with your daily time frame first, guys. Mark your level of reaction. I'm going to show you how I mark them. You might mark them differently, but again, you need to know. Now you should be able to know exactly the levels I'm marking them and which levels are there. I'm marking point of reactions, guys. Gu- Guys, can you hear me? Hi guys, can you hear me? Sorry guys, I had an internet connection problem. Anyways, I'm marking point of reaction. Can you see? Can you see all my screens right, guys? I'm marking point of reactions, guys. This is how I mark my charts, guys. So I've marked the major point of reactions, guys, as far as my charts are concerned. And then I'm marking the Wix point of failures, guys. Fred, are you attending this lecture? I don't like marking around these areas because see, this is close to this resistance level, right? So I don't like it, but I'll do it for you for the sake of you guys. I do not like overcrowding my charts, guys. So I've marked my point of reactions and point of failures, and now I'm trapping the price. Exactly, this is how I trade, guys. Exactly, that's how I trade. So now this is what I'm reading this. If the price breaks this area, right, guys, then the journey is to the upside to test these levels 78.26. And if the price rejects from this area, guys, the next destination is 75.30. And if the price breaks 75.30, then really opens up to the downside, which is 74.50, guys. You understand? And that is how we do the commentary when it comes to analysis when we're giving analysis to the traders on the desk, and that's how we do the reading. Understand, guys? So we like projections, but we do not project a lot. Instead, we follow the price action. Buy above these areas, sell below these areas, and this is exactly how the professional trader would give a reading to the desk traders to trade on those levels. Makes sense. Remember, the desk traders are not trained a lot. They doesn't have so much experience. All they know is exactly buy at certain levels, sell at certain level. It is the analyst who tells them, the trading analyst. Understand, guys? Like us, like me, one of like me, I'll send them exactly. You open up a sell trades around 52, 60, 30 areas, guys. The break of this level, and you have your stop losses above a certain level, and that is what we give them, and that's how they trade. And they are not trained to be an analyst, guys. They don't even have qualified education in economics or anything. Understand? Yes. So that's my reading now. Now let's do the reading. The price is in an uptrend, right, guys? In an uptrend. So your ST is in an uptrend. Understand, guys? What does the ST means? And that is your consolidation zone, guys. The price is in a very in a consolidation here, right, guys? But that is where the price is. The price has to either clear the top of this to get out of this box, or reach the low of it. And right, guys, in this triangle, the price is almost about to break either side, and this will be happening hopefully this weekend, this Friday. Understand, guys? In elections, yes. So this is going to happen. Break out either side, and that's what we need. Now, guys, remember before what's happening. The price was moving from here, testing the resistance level, guys, and falling back to the support level. Then the resistance, then the support. Nothing else. If you see what's happening, it's exactly the price is moving from between support and resistance. So do not overcomplicate your philosophy and thoughts. Keep it simple. Support and resistance and nothing else, right? Now let's observe the candlesticks on daily time frames, guys. Right now we have, this is exactly you should approach the market doing analysis, guys. Daily time frame, top bottom analysis here. Guys, this candlestick represents institutional sellers controlling the market, right? You see this candle, engulfing candle, right? Strong body, and that you need to remember. This candle represents institutional sellers in the market. The price rises, went up, tested the resistance, and the next day it has failed to breach the high of the previous candle, the sellers came in, institutional sellers, right? Why does I say institutional sellers? Look at the candle body, 94 pips, 5 pips. This is substantial. Understand, guys? Average move on Australian dollar is 60-65 pips. So this is substantial. Average daily range, ADR, normally the guys say it's 60 pips, 65. Now the next candle, after this candle, guys, you can open up your sell trade after this candle, yes, and remember your stop loss has to be above this. Once the price breaches the controlling candle, which is this, it means that for the price to breach and reach above this controlling candle, it has to be institutional buyers entering into the market to break above this, right, guys? So that is why you know exactly, as long as the price remains below this, institutional sellers are controlling the market. And also when institutional sellers are controlling, we want to trade, sell with the institutions, right? Understood? I'm just showing you guys on the daily time frame right now how the reading which I do, I'm controlling my I'm establishing my relationship with the price action. I'm focusing on her and see where she goes, how she goes, what sort of dressing she's wearing, blue, black, the mood she's in. You understand? You need to sort of learn those sort of things. Make the price action your good sort of girlfriend and boyfriend for the women's attending this lecture. And trust me, and then trust me, you can have, I don't want to say the word. Okay, guys, see this. The next candle fails to break the high of the controlling candle, so sellers remain in strength, right, guys? But do not be surprised if the price rises. There might not be enough institutional sellers here, right? So they need more investment. That's what I said. They need more investment. That hence, they move the price back to the upside. And again, one philosophy is this: they want more investment to go to the downside. Maybe, right? Hence, they need more selling investment, and that is why they move the price to the upside, make a double bottom, guys. This bottom, double top, one top, the second top. Institutional sellers came in, right? The price was here at one stage, attractive for the institutional sellers. They came in, boom, to the downside, right, guys? So double top formation here. One top, two tops. The second top can be exactly at the same length of the first top or slightly shorter. If it is slightly smaller than the in height than the previous top, and that is exactly what we're looking for. Make sense, guys? Institutional sellers came in. The buyers pushed the market up, and institutional sellers came in. So that it also shows institutional sellers are controlling the market, right, guys? Now, if we talk about the candlesticks, strictly candlesticks patterns, guys, this is your bearish engulfing candle, and this is your shooting star, guys. Understand? That's your shooting star. Understand, guys? Understand, guys? So, so see this. I know exactly the next day I will be selling. Now I'm going to show you now first. On this day, after the close of this day, guys, the next day, I'm predicting the next day. All I need is if the price fails to break the high of this day, then the price will be testing at least low of this day, or even might breach the low of the next day. And exactly that what happened, right, guys? The price rises, fails to breach the high of this day, right, and continue to the downside. So I can predict my day. Understood, guys? Understood. The next day, if the price will open here. Now, if the price fails to break the high of this previous day, then the price might at least test the low of this day or break to the downside. See what happened? The price opens, buyers push the price up, fails to break the high of the previous day, right? And what happens? Boom, to the downside. So I can predict mine for next day. Understand, guys? Understand, guys? Let's go to the next day. Price closes here. I can see rejection both side, right? So my prediction is this: if the price opens here, now I can either test the high of this day or the low of this day first. And again, if it fails to breach either direction, it will go and test the other side. So let's say if the price opens here and tests the low first and it fails to breach the low of this candle, it will go and test the high of this candle. And if the price opens here, first go upside to test the high of the previous day, it fails, then it will go to test the down of the previous day. Makes sense, guys? And exactly that what happened. The price opens up, went the downside maybe first, fails, boom, upside, fails, boom, back down, right? Exactly that what happens. So you can predict your next day. Understand, guys? Do you understand, guys? 100%. Let's say what's happening next day. Now this is again neutral, right? I have no indication. So this is my reading for the next day. If the price opens here, the price might I can see the rejections here, right? Rejections here. Though controlling candle is sellers, but I can see weak holders are trying to push the price up, providing resistance. These wicks represents a fight, some sort of fight by the buyers. So let's say what happens. The next day, my reading is if the price opens here, fails to break the low of this candle, then price will go at least test the high of this candle. That is my reading based on this rejections area. Look what happened. The price opens, first went down, test the low of the candle by the sellers, fails, and boom to the upside, right, guys? So I can predict the next day. Understand? Understand? Now see what? If the price, this is bullish, bulls came in, and I know already the buyers are trying to break the high of this candlesticks, right? The controlling candle, and that is their main objective, ultimate objective. Now let's see what if the price opens here, if the price fails the high, breaches the high of this previous day, right, guys? Then the price will aim for this candlestick, high of this candlestick, right, guys? And if the price fails to break the high of this candle, it will continue and test the low of this candlesticks. Understand? See what happens. The price opens, slightly went down and reaches the high of this candle and shoot it to the upside, right, guys? See, if I was trading this day, I would already had my buy trade, and I have closed my buy trade with at least 40-45 pips whilst trading on the lower time frame. I'm not teaching you to utilize the daily time frame to trade on the exactly. I'm teaching you how to establish your possible buyers for the next day. Read by reading the buyers and sellers into the market. Make sense, guys? What I'm saying makes sense. So it opens here. If it breaches the high of the previous day candle, exactly that what happened, right? It breaches, boom to the upside, and I exactly know buyer's objective is to break the high of this candle. At least they had made an attempt, failed, right? They failed and closed here. What about the next day? Now this is the high of the next day, guys. This is the low of the, pretty simple. The price open, if the price fails to breach the high of this candle, it might breach, then it possibility is the price will breach the low of this candlestick. Look, the price opens, slightly push up, sellers came in. I already know the sellers are controlling the previous candlestick. See, significant sellers controlling, right? It fails, it breaches the low of this candlestick. Look what happened, boom to the downside. So you can already predict this next day will be a selling day. Understand, guys? Understand? It's so easy, guys. Understand? Fails to break the high of the previous candle, boom, to the downside. If I was trading this, at least if I enter a trade on the low of the previous day, it's still 46 pips, guys. I'm not suggesting you to trade like this. This is analyzing the market, reading the market, exactly what's happening within the market as far as the buyers and sellers are concerned. Yes, this is your controlling candle at the moment, and then, but again, this is also your controlling candle, not just this candle. Remember, this candle has failed to breach the high of the previous candle, right? Okay, then what? The price is here. The next day price opens. Very simple. High and low. So very simple. If the price opens and it fails low of this candlestick, it will continue to the downside. And if it finds support around these levels, it might aim towards upside. What happens? The price opens, went up, failed, guys. It fails, breaches the low of this candlestick. That is your sell trade for the day. You're done with 35, 36 pips. And again, this is not institutional buyers at all. Sellers are controlling the market. Makes sense? Sellers are controlling the market. And remember, this candle fails to break the high of the previous candle. Again, overall sellers are controlling the market. I'm just reading I'm just teaching you guys how to use the previous day candle to predict the possibilities into the next day. I'm not suggesting anything other than this. And then what happened? The price has rejected. The next day, my objective is this. If the price opens and fails to breach the low of this candle, it might go up. See what happens. Fails to breach the low of the candle, find some support, boom, to the upside, right? I already knew it might be a sort of bullish day. Now, this is a rejection. My next day prediction is if the price fails to breach the high of this candle, we might see movement to the downside. And exactly this what happened. This is happening right now into this day. So this is my prediction for this day. If the price fails to breach the high of this candle, right, guys, we will see the continuation to the downside, at least to these levels, 75 to 83. But if it breaches, we will see movement to the upside, at least try to attempt 76.50. Makes sense? Because remember, these movements are not just movement. This is a fight going on between buyers and sellers. So guys, do you understand how to read the daily candlesticks and candlesticks to understand what's going on as far as the buyers and sellers are concerned within the market? Say yes if you understand. Trust me, you can just utilize daily candlesticks to trade easily. If you're busy with your jobs, with your professions, you don't even have to go on the shorter time frames though. Understand, it's important you do your reading proper. It's important because if without reading, you are gambling. If you can read inside out somebody, if you can establish that relationship with your girlfriend here or boyfriend, which is price action, trust me, you would even know before she moves on to the right, or you would even know if she's not in the mood to go to the pub or a club for you with you. So trust me, all you need is to establish a relationship, anticipate what she might be doing, and trust me, if you are reading correctly, you will always know 8%, 8%, 80% out of 100 that where she is going to move or head towards. Any questions so far, guys? Any questions? Any questions? Okay, can you guys see my screen, right? So let's say if I took a trade based on daily time frame, guys, after this candle, then I should be still in my trade based on the commentary that what I did. What this is the bottom line. The institutional sellers are controlling the market. Buyers have tried to to take over the institutional sellers. They had failed, right? And hence I would still should have been in my trade based on my stop loss above this, right, guys? Right, guys? So I still have made at least 70-80 pips by now. For instance, if I'm trading daily time frame, guys, I'm not suggesting you're trading this, but I'm teaching you if you can do the reading correctly, you can trade any time frame. It doesn't matter what time frame you're on. It does not matter. So far, so good. You need to know your patterns, guys. Engulfing patterns, bearish engulfing again. That's your hammer. Hammer brings some buying pressure, buying buyers. Exactly that what happened. The next candle rises. So hammer is a bullish, right? Slightly bulls to the upside, bearish. Next day, sellers bullish, bearish engulfing. Sellers came in, bearish engulfing. Sellers came in. Doji's rejection, slightly buyers push the market up. So you can see the connectivity you can see the connectivity, right? It's not just happening. There is obviously a fighting going on between buyers and sellers, a competition to overtake the market. Understand, guys, the objective is either to break this support levels for the sellers, and buyers wanted to break this area of resistance. Understand? Any questions? Okay, great. Now, guys, based on this, I would like to be in a sell trade unless the price breaches the high of this candlesticks, and that's what this is how I would approach the market. Understand, guys? Now I'm going to show you the price rises. Tapped first the resistance level, guys. Institutional sellers came in. You see this candlesticks, right? Shooting star, sort of shooting star. Institutional sellers just came in. Institutional sellers just came in, right? Tapped on the resistance level. Look at this is the resistance, right? Point of reaction, right, guys? The next candle fails to close above the high of the previous candle. Again, I will stay in my trade, guys. Shooting star again. Shooting star doji. Makes sense? I know institutional sellers controlling the market. Next candlestick closes below, breaches the low of this candlestick, close below. This is engulfing candle, guys. Sellers are in control. Understand, guys? Then what happened? This candle, slightly buying candlestick, buyers came in, fails to break the high of this candle, controlling candlesticks, right? Sellers are still in control. The next candle spiked to the upside. The buyer has really pushed at a certain stage to these levels, guys, but sellers came in and pushed the market down, and it closes here. And it closes here, right? So sellers are controlling. Sellers are controlling. They have failed to break the high of this previous candle. Understand, guys? Understand, guys? Remember, you will decide after the close of the candle. You will always decide after the close of the candle. Say yes if you understand what I'm saying so far. You guys are with me on the reading. I will stay in my sell trade. The next candle closes, fails to break the high of the previous candle, bearish, boom to the downside. Guys, 60, 70, 80 pips. Again, I will stay in my sell trade. I'm teaching you to trade the daily time frame right now. It doesn't matter what time frame it is. Forget the time frame. Focus on the bloody candles, okay? Candles, forget the time frame. The next candle, forget, fails to break the high of the previous candle, right? So I will be staying in my trade regardless. There was some bullish momentum into it. I don't care. I want to see this a bullish candle, reversal bullish candle, and the next follow-up candle, another reversal candle, breaking the high of this previous candle, and has to be a strong bullish candle. And that is where a bullish reversal candle and a follow-up, it confirms a change in the mood. Change in the mood. Understand, guys? The next candle, see, boom to the downside. Do you see? Boom to the downside. So I already know by my reading the buyers has failed. Really, they're trying, but they have been failing, and institutional sellers are controlling. And exactly this what happened after that fight with the buyers got tired. Suddenly, the sellers took control over them and see the spike to the downside. 56. Yes. And then the next candle opens, fails to break the high of this candle, right? Even the high of this candle, sellers still in control. The next candle fails to break the high of this candle, sellers control. The next candle fails to break the high of this candle, sellers control. And then buyers came in really hard, pushed the market. The last attempt, the last attempt before the fire switched off, it sparks, right? Exactly that what happened. A last push before we just say, we lost this fight, no strength. A last push to the upside, fails, right? Fails, and boom to the downside, guys. That was the last push here. Can you see? Can you see? They were losing the strength. So I will still stay in my trade, which I've entered here, guys. See, you understand what I'm saying? There's no reason to close the trade. Do the reading, who's controlling the market, buyers or selling controlling the market. Understand so far, guys? Then you asked me something. I couldn't read. Let me read. When breaking the high, I want to see the break of the entire previous candle, not the body or the body wick. The objective is it breaks the previous candle. Their objective is to break the high of the previous candle to overtake the buyers. Makes sense. The previous whoever's controlling previously. Makes sense. Are you clear, Zain, on this? Hmm. Okay. Again. I'll stay in my trade, guys. Exactly, new high, like higher price making higher highs. You say rising, the trend is rising. Exactly, the candles is making higher from the previous high, previous candle, high from the previous candle, showing the strength. Similarly, makes sense. No difference. Can you see my screen, guys? Okay, great. So I will be pushed to the downside. I will be staying in my trade, guys. The next candle fails to break the high of the previous candle. It resists, fails to break the high of the previous candle. I am deciding my judgment either to close my trade or stay in my trade based on the close of everyday candlesticks. I'm chilling. All I do is I see my charts on the phone. End of the day. End of the day. That's all I do. That's all I need. fails to break a high of the previous candle, I will still stay in my trade. A lot of people will say, you've got hammer here, get out of the trade. Why would I get out of my trade? I can still see what's going on, right? There will always be a fight. I want to see if institutional buyers enter into the market. If so, get out of your trade. Not yet. See what happens the next candle. Let's break high of the previous candle, boom to the downside, right? Right? This candle fails to break a high of the previous candle, the first bullish candle, and then see there is another bullish candle which is sort of follow-up candle. Can you see this follow-up candle, guys? So I would like to get out of my trade on this candle, on the close of this candle. I can see the buyers are sort of in the market. I see two bullish candlesticks. Make sense? Makes sense. This is just based on the candlesticks analysis, guys. You haven't added anything yet. I'm going to show you exactly something as far as teaching is concerned. But right now, my objective is for you guys to start understanding how to read the candlesticks, right, guys? So, guys, if I've entered my trade here, I have made 238 pips. My stop loss won't be more than 75 pips. Make sense? Make sense, guys? Make sense? See, what I'm trying to say is, see this. This trade was a control trade. This trade was not being, the fate of this trade was not decided by the market. Instead, I was controlling the trade on daily basis. I was really controlling my trade. My investment was controlled by me, even though I rolled the dice. Since then, I have been controlling based on daily, everyday candles analysis, right? By looking at the buyers and sellers, and not just let I've entered on the certain level, and if she goes to the support, good enough. If she doesn't, I don't give a shit about it, and I'll take a loss. No, this is investment, and there's a difference between an investment and gambling, and this is the difference is controlling your trading. And remember, how can you control the trade? By looking at the buyers and sellers. And how can you look on the buyers and sellers? By reading the candlesticks, right? So you guys need to focus on candlesticks. You guys don't focus on candlesticks and little moaning and crying what's happened, why the price has gone away from me, from here, blah blah blah. It is you who has failed to read the candlesticks and read the buying and sellers behavior within the market. Make sense, guys? Understand completely? Okay. I'm going to show you something very important, guys, when you're trading. Now, I'm going to show you how to. This is what I'm going to show you. Will give you a lot of boost. I haven't shown you yet. I show you already, but I have practiced this personally for 6 weeks, 7 months before I take out the fear out of myself. Now, this is your exit strategy. I'm giving you what exit strategy right now when you watch your trading. This is your level, right? Our objective is to exit the trade with the small loss and stay in the trade with more profits, right? So risk and reward is good, as I said earlier. So the objective is, how do I exit the trade straight away if it's a wrong trade? And trust me, 80% exactly this what happens. You will always enter, and price is at a resistance level, certain resistance level. The price came up, tapped, price went down, tapped again, twice, right? Remember, use your reference line. First of all, when this tap is not yet established, all you need to do is just put a blind reference line around this area, guys, like this. Understand, guys? Give it a breathing space. Understand, guys? So let's say if I have entered, I don't care sometimes. I just enter the trade on the here without looking anything. At just a significant level, let's boom. Because I've got an exit strategy here. Let me show you the exit strategy. Because I know if she goes in my favor, I'll have 4 times more profits than I have a loss. So I don't give a shit about entering into the trade and having 2 losses, small losses. I don't give a shit about it. That's how I go aggressive. Because I have an exit strategy, right? You understand what gives me the confidence on this? Exit strategy, bloody exit strategy. Yes? Understand, guys? Say yes to me at least. Not deep pockets. Absolutely wrong. My stop losses are never more than 40, 40, 45 to 45 pips if I'm trading higher time frames. I'm giving you an exit strategy. Just see, risk and reward is good on my side, and that is why I'm profitable. My risk and reward, I'm going to show you guys here. So if I'm taking this trade, guys, all I want to see is the price does I will exit the trade if I see this. The price break this and closes above, right? I'm out of my trade. I'm out of my trade. It closes, breaks, and the candle closes above, right? I will exit my bloody trade. I will exit my trade. This 80% this will fall and continue to the upside. It, even though it might do like this, maybe. So I'll exit my trade. I will never stay in my trade. Though again, maybe the price give you another opportunity to the downside. If it does, same exercise again, guys. Because this is how you exit the trade. It breaks and I'll wait for the next candle to close outside and then I'll exit the trade. Exit the trade, because remember, it doesn't matter. Do not be under fear that you'll take a small loss. It will be not even 1% loss. Let me tell you why. Because the day it rallies to the downside, this profit taking will be 4 times higher than this loss. You understand? 5 times bigger than this loss. Understand? So do not be afraid of this. That's how you need to get out of your trade, out of your trade, out of your trade. You understand? You understand what I'm saying? I'm going to show you the example. The price tapped and then tapped again, right? And this bearish engulfing. Just put a reference line, guys. That's all you need. Just put a blind reference line. All I need to see is a break above this and a close. I'll exit my trade. If I do not see, I will keep on selling it. Can you see now what's happening? Sell again, sell again. Can you not see? I won't buy. I'll just trade with the trend. All I want to see, this is my exit strategy. If I exit, I will take a loss of 250 pips. Remember, this is a weekly time frame, right? But remember, if it goes in my favor, it'll give me 900. This range is 1200 pips. Make sense? Look at the risk and reward. I'm trying to teach you guys here. Look at the risk and reward, right? She fails to break, right, guys? Look at when she fails eventually. Oof, see, 1500 pips, and really eventually 2588 pips. Make sense? Make sense? Look at my stop loss. The confidence that I have is this: my exit strategy is giving me a good risk and reward. If the trade goes in my favor, I'll have a profit of 4-5 times bigger than the loss. And remember, the thing which gives me immense confidence is my exit strategy, not my entry. I don't even care when I enter at times. I just blindly enter from the significant level. I'll say, I don't care. Let's try it 2 times. Let's do a gamble 2 times. See if the price. All I know is exactly if the price breaches, closes above, exit the trade straight away. Make sense, guys? So this is how I'm very profitable. Do you see? I've got an exit strategy. Do you see what I'm saying here? I'm not afraid of a single loss. I don't care, to be honest. Do you understand, guys? It has to be a significant level, obviously. You trade by using all what I've taught you guys. I'm going to show you exactly. I'm going to show you exactly. You see this. This was your level. The price tapped again, right? Let's say you took a sell trade. You took a sell trade. Well, that is where you exit the trade. You understand what I'm saying? Let's see if you took a sell trade on this bearish engulfing candle, you just exit the trade here on these levels, right, guys? It went to the downside, it came up again, and that is you exit the trade. You understand what I'm saying? Look, I've exited the trade. Understand, guys? Say I've entered the trade here, went to the downside, I booked my profit, let's say 800 pips, 500 pips. The price arrives here again. I took a trade on this small candle. You understand, guys? All I need is I took a trade. What happened this time? The price went down and breaches. I exit my trade with how many pips? 280 pips, guys. But see what happens earlier, what I did. How many pips I've made earlier? 840 pips, right? So see, my loss is so small. I'm talking about weekly time frame here. I'm trying to give you the concept of the exit strategy you need to know. You understand what I'm saying? Where to exit the trade? Make sense? Then see what happens. It doesn't matter I had a loss here, because let's say if I enter a trade here, even she doesn't even started the move to the downside, it's still giving me 1,000 pips each. Makes sense, guys? Do you completely understand my exit strategy? Very important what I'm teaching you, because I haven't shown you guys yet this in, I did not talk about it in detail in my lectures yet, but I did ask you to mark the point of reference. Make sense? And that is your ST. That is your ST. The price has break your ST. Understand? It has breaches the ST. You exit the trade. You understand? All of you, do you know what I mean by ST? Say, tell me, somebody say to me, what does I mean by ST? Exactly, exactly. That's what I'm saying. Come on. You guys are listening to me. You guys enjoying this lecture, right? If you're not enjoying the lecture, I can finish it right now. Okay, great. Now, exit strategy is important. The reason of my confidence is my exit strategy, not my ability to enter the trade. I don't give a shit about entering the trade at a certain time. I don't even look at the candlesticks. All I do is, by certain level, just boom, enter into the market. Anticipation, let's say the price might 2 3 times go into my direction, I'll make some quickie. Makes sense? But I've got an exit strategy. Again, I'm going to show you more. I'm going to show you the failures so that you can learn from them, and that's what give you that gives you the confidence. This candlestick, let's say I took a blind entry on this point of reference, right? The price came down, rises. That is my exit. After this candlestick, exit the market, right? So if you enter, your exit is 210 pips. Again, the price did go to the downside, 860 pips, right? So this is how I trade. Enter, I start nailing 555, 300, 400, 300, 400 pips 3 times. Even she breaches to the upside and fails the ST, and I take a loss. I don't care about that loss. The reason is I already had made so much profit. See this, 600 pips, 700 pips. I know my loss is like, oh, 300 pips, right? Well, then what? Let's take another loss. I don't care. These two candlesticks. Okay, I like these two candlesticks. Let's take a look. When the price rising and breaches this, that is where you exit. So you exit the trade whilst controlling the market. And again, guys, if you have this and the price make a second high, you adjust your trend line to these levels. Make sense, guys? So that is your exit. That is your exit. Can you see? I know my exit because this setup to the downside, this setup which I'm expecting, sell setup will always be like this. This setup to the downside has failed, guys. This setup has failed. Oh, this has failed. Can you not see? Because I know the day this M happens, right? Oh boy, I will be in profit. I don't care, to be honest. Even entering here, I still made money. Can you see? Controlled exit. I'm not first. I'm not shivering. I'm not. I'm not. What the word I should use? I'm not. When you're under pressure, what's the word you use? Like your state of the state of feeling is like nervous. I'm not nervous actually. I'm not nervous. I'm not under pressure. Anxiety, exactly. I'll just sweetly get out of the trade by saying, okay, exit strategy. This is my exit strategy, right? You need to have an exit strategy. Even the battlefield, you need to have an exit strategy. Where to exit the market, where to exit the battlefield, plan B. Let's you know, if without exit strategy, there is no bloody trading. I had worked 6 months on just practicing this on charts to become a profitable trader. 6 months I was sleeping, closing my eyes and thinking, okay, the price came back, came down, came back. Okay, it breaches. Oh, I'll exit the market. I used to dream like this. Close my eyes when I used to get tired looking at the charts. I used to lay on the bed and close my eyes and think about it, right, guys? And trust me, see what I did. I made my life easier. I can just buy anything with the money, right? Because I got an exit strategy. Okay, now again, let's do it again. See what happens when the price was here and it fails to breach this, right? That day, what happens? Look at the profit, 3,537 pips. And the losses you was taking was how much? 300 pips, right? Look at the difference between the rally and the time it fails. You understand what I'm saying? Even this is an uptrend. I don't care if it's an uptrend. I won't be selling on this uptrend, right, guys? I won't be selling, but I'm just saying, even if I'm trying to sell within the uptrend, I don't even care because the day I'll have that rally, 5 times more, 6, 7 times more profit taking. Makes sense. I'm just giving you an exit strategy, guys. Forget everything right now. Forget the candlestick analysis is an add-on. You understand what I'm saying? Okay, okay, let's see. Okay, okay, let's see. Okay, okay, let's see now. Okay, guys, a lot of people's doing this, buying this. 4 hours time frame. Price rejected. I already knew the next candle rejected. Price to rejected. That is your entry, guys. Your entry will should be here around these levels, right? After this candle close, you can enter the market. What is my exit strategy? This is the ST, guys. This is the ST. If the price breaches this, you exit your trade. Make sense what I'm saying? If the price breaches this, I'll exit my trade. But trust me, the day she'll go up if the price has to go up, right? It will never break this. It will never break this. Let me give you an example. Can you see this? Can you see this? Can you see this, guys? It never breaches this. Boom to the upside, right? And then see this. If you take an entry here, your exit strategy, reference line, it never breaches this. Can you see what happens? Boom to the upside, right? It did breaches here. It did breaches here. Price went up. It came down. It breaches, right? It breaches. You exit the market. You exit your trade with like how much loss? 23, 25 pips. I don't care if I take this loss 30 pips. Because see, when I enter again with the exit strategy, the first trade, boom, gave me how much? 101 pips. Then I enter the trade again with the exit strategy. It never breaches this. It never breaches this. Boom to the upside. Can you see this? Then again, let's say if I took a trade around these levels, exit strategy. Right, guys? It never breaches this. Boom to the upside. Can you not see? Then let's say I've sell it here. I've sold here, right? That is my exit strategy. This is the exit strategy, but then you focus on the candlesticks, yes, but exit strategy is very important because this is the bottom line. I need to exit the market. You understand? And I know one thing because my risk is smaller than my rewards, right? And then if you enter on this double bottom, that is your exit strategy, right? You enter, stop loss just below, exit, close below, and the candle closing outside, I'll exit the trade. Never happens, right? Boom to the upside, right? Enter the trade, enter the trade, right? It fails to break to the upside, right? Boom to the downside. Look at the profit taking, 100 pips. Like if I have a loss, 23, 24 pips. See, I had this loss. That was like 34, 35 pips, but the profit is around 100 pips on 4 hours time frame. Makes sense, guys? Does it make sense? I'm going to show you the example. Let's say I took a trade on this. This is where I'll exit my trade. Very simple, guys. I'm out of the market. Control. This is where I enter. That is where I exit the trade. Closing outside, right? Bloody exit the trade. So how much I lost? Not even 3, 4 pips, right? Okay, price went up again. Let's take another entry. Let's say I took another entry. I lost 3 to 4, 5 pips, right? I'm just entering randomly. You don't enter randomly. You enter significant levels, but I'm teaching you, giving you the confidence of this exit strategy. I don't even give a shit about where I'm entering into the market. All I do is I know I've got an exit strategy, a risk and reward strategy. Enter the market here, the price tapped up to the upside, right? Breaches, exit your trade, guys. You enter here, exit your trade. How much loss? 25, 26 pips. 4 hours time frame, that's all I had, like around 40 pips. Again, I don't care. Let's do it again. One candle. See, guys, what happened this time? When she fails to breach this, I got 93 pips. You understand? I recovered my previous losses, right? I'm almost on more than a brag. I still have booked more than 10, 15 pips still. Understand? And I'm not entering blindly. So I will be obviously entering on the significant level, but I'm just teaching you using this strategy, exit strategy, which has good risk and reward. Trust me, you'd have that bloody confidence in yourself. You won't be crying, oh, the price is going up. Oh, I'm going to have a stop loss hit. Oh, this is what happening. You would not have that bloody fear because you know exactly. All you need is when you will be right, you don't care. You don't be fear on you. You take out the fear of losses out of yourself, out of yourself. That's what you need to do to be a profitable trader. Make sense? So if I'm trading this, this is the ST. If the price breaches this, the ST breaches. Boom. Understand, guys? Say yes if you completely understand what I'm trying to convey to you guys. The bloody exit strategy, the reference line, what I was talking about in my lectures. I've elaborated on this, guys. Use it, use it, use it, and practice areas where you take losses. Practice areas where you take losses and see how smaller those losses will be, how smaller those losses will be, how smaller those losses will be, and boost your confidence. Say yes if you guys understand completely and enjoying this lecture. This is this fear you guys have in your trading, right? Exit strategy. You don't know. You don't have the bloody exit strategy. That's where the problem lies, right? Yes, I'm giving you one. See, I'm giving you one. See this reference line, right? See what happens. The day it rallies. Ooh, 173 pips. Price fails to break this. This is your ST. Until the price remains below the reference line, right? Keep on nailing the market. You're just selling it. Every time you're selling it, every time you're selling it, it breaches, fails to break above. Again, I'm selling it. It fails, goes above. That is where the ST was broken, right? No more selling. No more selling now. Understand? This has gone. This has been breached. Understand, guys? That's what you said in his lectures, right? Quinn said in his lectures, if it breaches, you stop selling. If it stays, this is your sell zone, guys. That what exactly he tells you. Anything above it is a buy zone, right? That not what he's saying all the time? Simple. Trade with the bloody trend. Why would you be buying it? Just keep on selling it all the time. Makes sense? You understand? We are just buying it now. Why we are buying it? Can you not see? Testing the support level, right? Why are we buying it? Now the question arises when we will be selling it. Let me tell you when we will be selling it. If the price came inside this, closes, then it's again in the sell zone, right? It's again in the sell zone, right? Right? Say yes, right? It's again in the sell zone, then you will be selling it again with the trend. Otherwise, you will be just bloody buying it. Makes sense? But then again, I've established this sell zone again. Price moving from one resistance to support and from support to a resistance level. That's what's happening, right? Price reaches the support, establish a new resistance, came back, test support, back to resistance, back to support, maybe going back to resistance. Exactly that what I teach you guys in the first lecture. A travel between a support and resistance. You understand this? Do you understand this? Say yes if you understand this, guys. Zan, you understand this? Khudayar, do you understand this? Chris, you understand this? Exit strategy is very okay. Good, Dania. Exit strategy is very important. Very important. The exit strategy. Without an exit strategy, there is no confidence in our trading, guys. Then we are pretty much like gambling. Yeah, I'm going to show you in a minute. Let me show you the trick. Okay, do not be trading on 15 minutes time frame. Listen to me what I'm saying. Somebody was telling me today you want to take an entry on 15 minutes. I was vexed. I was literally yelling at that person, right? Come on, give me some respect by listening to me what I'm teaching you. I'm not teaching you guys because you paid me some little money, right? My time is far more important than the money you had invested. Again, I'm trying to invest myself for my happiness, right? Because I know personally that you guys can trade profitably, changing your lives. Oh, that satisfaction, trust me, is worth more than the money. And that's what I'm doing right now, guys. Respect me on this. Listen to me what I say something. Follow me what I'm saying something. Trust me, if I'm not sure of what I'm saying, I would not be saying all of this stuff to you guys. Trust me, I'm right what I'm saying. Trust me, follow me on this. If your failure will be, if you fail, there will be just one reason, guys. You had failed to follow me, listen to me, and that's what the problem lies. Thanks. Okay, let's do on 15 minutes now. Okay, 15 minutes. Let me show you guys. Let's trade 15 minutes time frame a little. Mark your levels first. Australian US dollar, right? Okay, great. I'm marking my point of reactions and point of failures. No difference at all. I told you guys there's no difference between time frames, right? That's what I've been yelling every day inside out. Okay, let's start from here. The price is here, right, guys? Bearish engulfing candle, right? Point of reference. You understand? This is a reference line, right, guys? Understand, guys? Reference line. I'm in the sell trade. Market went to the downside. Market rises. If it rises, this is my reference line. I'll adjust my reference line. Can you see like this? And then the market spikes again. I will adjust my reference line to this. Now, unless and until the price is below this, I will be selling. That is my sell trade. That might be my buying trade, guys. If I buy on this, again, if I buy, my reference line is this. You understand? Do you understand my reference line? Exit strategy, right? The price breaches my exit strategy. That is my sell trade to the downside. Where is my reference line? Can you see this? My reference line. Then I'm gonna buy here. Just see this. That is my buy trade, guys. Where would my reference line will be? Let me show you. This hasn't happened yet. Reference line has to be, if I'm buying here, reference line has to be around near the low of the candlesticks. The price tested, boom to the upside, right? Then again, I teach you guys. Let's say if you took a sell entry. This is lecture 1 I'm repeating right now. If you took a sell, this is your reference line. Exit. My exit strategy is this. Just see. My exit strategy is 10, 15 pips. Look at the profit taking. 106 pips. My exit strategy is what? How many pips? 8, 9, 10 pips. Look at how many pips. 24 pips. At least even she has failed to rally to the upside. My entry is here. Exit strategy 15, 20 pips. Look at the downside. 47 pips, right? Still my risk and reward is 1, 2, 1, 3. Can you not see? And I'm trading bloody 15 minutes time frame right now. Can you not see? It is very hard to increase your risk and reward trading in smaller time frames and still see my risk and reward. I entered here 20 pips stop loss yet, I think. See what happens to the upside. 39 pips again, right? Then again, I enter here. My stop loss is exit strategy here. How many pips will be? Let's say 20 pips around these levels, right? Look at what happened. The price went to the downside, 38 pips, right? Let's say again. This is my reference line, right? So we are trading ST. This is ST. If it breaches, the sell zone's gone. Now buying zone. I bought the market, my reference line. So easy, so easy. You have to be consistent, not just judge yourself based on 3 trades and start crying and moaning, oh, I don't know how to trade. No, 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 no. Not like this. Upside. 28 pips. Obviously, I'll try to exit my trade based on this one bottom, two bottoms, right? See the rejections. Let's say I want to sell the trade. If I want to sell here, guys, for instance, let me show you the exit strategy. I sold here. The price came back. When the price came coming back, I exactly know I have to exit if something goes wrong. I will exit my trade on this. We understand, guys? When the price is coming back, all I'm waiting is the price to breach this, exit. If I'm entering here, that is my stop loss around these areas. Not even 10, 15 pips, guys. I'm exit the trade with 10, 15 pips. Boom. Then what? Enter the trade on this. This is your exit, right? Right, guys? See what happens. Boom to the upside, right, guys? Stop loss 11 pips, profit taking 63 pips. This is 15 minutes time frame I'm trading right now in front of you. How many entries I've just shown you guys? Do you see the okay? The bottom line is this of my success. This is the principal bottom line, guys. And you will not just enter. You will wanted to see a bullish candle and candlestick. You wanted to see a bearish candlestick on the breach of resistance. You understand? Not just blindly enter, use the candlesticks. Obviously, you want to see the buyers and sellers coming into the market. But I'm telling you, the principle is this. This is the principle of my strength of trading this. that I've got an exit strategy which I know gives me a risk and reward of 1 6 and 1 4. So all I need is 4 losing trade, 2 winning trades. I'm 100% in profit. Do you not just see this? What I just show you guys on 15 minutes time frame? Every time frame you can do the same now. This is your trade, guys. Exit strategy. Boom to the downside. How many pips? 104. And I'm going to show you something. When the price keep on going down, then you adjust your trend line like this, and that is where you exit. You should have exit your trade on this. Make sense? Either exit your short trade on the break of this, break, retest, exit your short trade, guys. Exit your bloody short trade on this, and then you can maybe buy. You want to buy? This is your exit strategy. Well, this was your exit strategy. The price came in. That's why I said exit your trade. Exit. You should have closed your short trades. You remember I said early today that if you are in the buy trade, you might want to close your buy trade around these levels. But I haven't said you want to sell. A lot of people just start selling here. That was wrong. Let me tell you why. This is your support level, guys. Come on. That is your support level. So I want to get out of the trade. Maybe want another entry. Yes, now I wanted another entry, right? Let me show you. That's your controlling candle. You understand? That's your exit. Maybe you want to go to the upside. If the news comes into the technical side and in line with technicals, you will see market moving to the upside, guys. I'm just showing you guys. This is why I said if I was in the buy, I want to exit that buy because I just want to make sure that I earn for the day. Instead of staying into the trade, market came down all the way and I will be regretting and crying. You understand? Target oriented 100 pips trading, please, guys, please. But follow what I'm saying. With this knowledge, 100 pips is a piece of cake, right? Piece of cake. 100 pips is a piece of cake, and that's all you need to be millionaire. Show me you can make 100 pips every week. Then I'll show you how to become a millionaire later. So right now the ST is to the buying side, right? There's no selling, and hence there will be no selling. You understand this? Okay, guys, I'm about to finish the lecture, but do you guys understand what the message that I wanted to convey to you guys today? Does it make sense to you guys? Say yes if it does. If you understand the implementation of price action, please follow the price action. Euro US dollar, I'm going to show you quickly what I'm looking at. A lot of people's looking at this. Very simple why we're looking at this. Do not be impressed by others. You exactly know what to do and what not to do. Overall, guys, this is 50%. Price can go here, price can go here, right? Boom. Then what? Mark your levels. So when I took this sell trade, this is my reference line, right, guys? Right? Yes? Adjust this reference line. With this high, right? And that's where I exit. So I should have already exited my sell trade based on the price has break this ST, right? Now, possibility is that if you're in a buy trade now, guys, that's all you need. And remember, the institutional buyers are controlling the market, right? Remember, there is an institutional buyers controlling the market. Exactly, bullish engulfing candle. So on the daily time frame, that is your ST. If the price breaches this, further go to the downside, guys. Remember, if not, the price will continue rising like this. You understand? And obviously, if the price is rising, the price want to test this resistance level. You understand what I'm saying, guys? Simple. One support to another resistance, one resistance to another support. Going into 4 hours, well, I can see the price making higher highs, higher lows, guys. This low is higher than the previous one breaches, and that's where your entry is. So if you're in the short trade, that's where you exit the trade. You understand? This is your exit. This trade was exited here. Makes sense? And if you want to buy the trade, right? And that's where you can buy, have your reference line. Reference line means your exit strategy, guys. Stay in this buy trade. This is your exit strategy, and that's all you need to know where to exit. Remember, if she will rally, she will give you 5 times more than if you lose. So it does not matter if you lose, right? It doesn't matter. Do not judge yourself based on a trade. Do judge yourself based on 10 trades at least. 10, 6, 7 trades. And I can see something else on this. There is apparently harmonic pattern on this. This is just a correction trade, guys. Overall, Euro US dollar going to the downside 1.07. I'm going to show you why I'm saying this, guys. I'm looking around these levels, guys. 88.6 levels. Understand, guys? Do you understand? So I will teach you the harmonic patterns in lecture 5. So obviously you will exactly know how to utilize them in your trading. But this is what I so if I am trading, I'll exactly know where to go. And then again, Fibonacci expansions I'll teach you in lecture 5, guys. Lecture 4. Can you see they are almost in line? Can you see make sense, guys? The price already gone to 100% Fibonacci expansions. If the price closes above this, then you might see a completion of this harmonic patterns in line with 161.8 Fibonacci expansions. Make sense? So I will teach you all of this confluences later on. But remember, but the bloody remembrance is this. My focal is what I have taught you earlier. What I've just shown you exactly, that's my focal. My focal is not on these harmonic patterns. I do not trust them. I use them. I like Fibonacci expansions, yes, but trust me, they are nothing more than the projections for me. Nothing. Add on, absolutely add on. But that's what we are expecting right now, guys. And this, okay, that's new euro, new US dollar yen. Price went up, right? Fails to break a high of the previous candle, right, guys? And this candle fails to break the high of the previous candle, right? I think sellers are taking control here. But that's my reading is right now. Simple. Do not people saying she's going up, she's going down, she's going up, she's going down. Let them say what they like. You do not keep on projecting. All we need is price to go to the downside. We want to see this is our entry. With the break, we have an entry. But what I do is even if I've entered already after this candle close, let's say, but that is my reference line. Can you not see? Reference line. But that's where my reference line is right now, guys. If I'm entering into the trade already, if I see the break of this, I'll exit my trade straight away because I know the continuation will be to the upside. Let me show you why. Let me show you where. Look, let's say you entered on all these candlesticks, for instance, but you'll exit your trade here. Make sense? Even you enter, break, right? Outside, retest, exit your trade because it has break the ST going to the upside. This is an aggressive entry. The entry has to be after the break of this support level, right, guys? But let's say if I'm doing an aggressive entry, I don't even care. I know my exit strategy. And remember, when the exit strategy works, the day she works, ooh, 222 pips, and then price rises, rejected, you adjust your trend line. Again, you sell it again on this, you sell it again on this, that's your exit strategy, boom to the downside, 254. Let's say you buy here, this is your exit strategy, right? Boom to the upside, right? Understand, guys. Exit strategy give you the confidence to enter the trade. I do sometimes enter blindly. I don't give a shit about candlesticks at times. But then that is me. I'm telling you guys, utilize everything in a balance. You will be profitable trader. Confidence is the key. Exit strategy is the key. And trust me, when I finish the trading with you guys, the course, I will teach you exactly how to break down the analysis from weekly to monthly to weekly, weekly to daily, daily to 4 hours, 4 hours, then you take an entry. I will teach you, but for that you need to learn all these components individually first. Make sense? Do not apply your mind. Apply what the price is telling you. Do not be a professor by yourself. Let the price to be the teacher to guide you. Do not consider yourself some a philosopher. Let the price to be the philosopher. Right? The problem is our ego comes into it and we say, nah, we think the price will go there. Oh, I think. You ignore what the price is telling you. She is telling you she doesn't want to drink some water. She might need a beer tonight, right? And you're giving her water, and then obviously she's gonna nail you and go with another person. Exactly that would happen, and they'll be crying. Exactly. Do you understand today what I'm trying to say and the message that I'm trying to convey to you guys? And I've given you an exit strategy, utilize it in your trading, increase your risk and reward, guys. I'm giving you the whole bloody package here. All you need is a practice now. You need to practice at least 3 to 4 months on this. Thanks, Chris. You need to practice 3 to 4 months on this. Trust me, we haven't yet started anything else. Fibonacci expansion, retracement, and harmonic patterns, but now this is the essence and the key. Okay, guys, I can take questions from you guys. If let me open up the speaker and then I'll take questions. I'm actually very tired now, and I have to trade the Asian session tonight. Asian session is a firing session, guys. My advice to you is do not buy Australian dollar. There's Chinese news first, and the China news directly affect the Australian dollar. If the China news comes better, comes good, it will give strength to the Australian dollar because the Australian economy is highly dependent on China's Chinese trade connected to the Chinese economy first of all, and then again RBS. If the interest rate comes in, you might see a spike either side. So you don't want to stay in the trade. If you just want to stay in the trade, guys, it's a gamble. Interest rate, it's a gamble. Yen pairs, it will be a gamble. If there is significant monetary change in the policy, you'll see 150 pips, 150 to 2 to 300 pips up and down in the yen process. So be very careful, guys. I do not suggest you guys when there's an interest rate of a certain pair, do not bloody trade that pair that day. Select another pair or wait for the interest rates to come and then enter the trade. Make sense what I'm saying? Say yes if it makes sense. Give me a minute. Okay. Okay, I'm opening up the speaker, guys. You can ask me questions. Give me a minute. Let me open. Hi, Liz. How are you today? Michael, do you understand exactly what I've taught you today? Michael, do you understand? Give me a minute, guys. Okay, great. Ask me a question. If anybody has a question, you guys can ask me the question, please. Speak up. Anyone? Before I end this session, guys, if you have any questions, you can ask me, guys. Thank you.